In the dimly lit corridors of a Swiss bank, a man shuffled through a seemingly ordinary briefcase. What he revealed was anything but ordinary. Documents detailing backroom deals and covert operations that suggested who might really be pulling the strings of the global economy. Was it a multi-billionaire, a secret government cabal, or an elusive organization pulling the world's financial levers? The clues pointed to something much more entrenched and complex, a financial web that, for most of us, remains invisible. To untangle this web, we must dive deep into the intricate latticework of global finance, a world dominated not by faces that grace the covers of magazines, but by entities, institutions, and agreements that operate with quiet, yet formidable influence. Take, for instance, the Bank for International Settlements located in Basel, Switzerland. It's sometimes called the Central Bank for Central Banks, and wields extraordinary leverage over international monetary policy. With just 63 member central banks from countries representing about 95% of the world's GDP, this institution stands at the crossroads of major financial decision-making. But the Bank for International Settlements is just one piece of this vast puzzle. Another influencing force is the mammoth network of central banks themselves. Consider their collective power, able to adjust interest rates, control money supply, and manipulate currency values. We've all felt it when the Federal Reserve of the United States raises interest rates, and suddenly, loans are costlier and currencies fluctuate globally. However, there's a problem. These institutions, while publicly controlled, are significantly influenced by the financial juggernauts, the world's biggest private banks and investment firms. Firms like BlackRock, Vanguard, and Fidelity. With assets under management in the trillions, they not only hold unprecedented sway over stock markets and companies, but also over entire economies. At last count, BlackRock alone managed over $9.5 trillion, an amount larger than the GDP of Germany. This financial interplay extends beyond firms and banks. Consider the complex web woven by international trade agreements and multinational corporations. An example. In 2022, the top 7 multinational corporations reported a combined revenue exceeding $1 trillion. Companies like Apple and Amazon operate with revenues that surpass the GDP of several countries, giving them leverage not just in market dynamics, but also in geopolitical affairs. This connection between finance and politics is further underscored by the role of sovereign wealth funds. With over $11 trillion in assets, these investment funds are operated by national governments, and they're increasingly significant players in the financial landscape. The largest, Norway's government pension fund Global, is worth over $1.3 trillion alone. Their investment choices can shift entire markets, yet they remain under the radar of mainstream discussion. Now, here's the twist in this complex drama. While it may seem like power lies with institutions, firms, and funds, the real control comes from a more decentralized and, paradoxically, more interconnected structure, the markets themselves. Financial markets are where expectations collide, where confidence is built or broken, and where fortunes are made or decimated with a mere whisper of a change. Even the most powerful entities cannot predict or completely control market sentiment. Consider the 2008 financial crisis, which was a result of complex derivatives and unsustainable housing markets. No individual entity had the reins. Instead, it was a cascade effect driven by fear and lack of confidence. Let's plunge deeper into this analysis. We often hear about influential leaders, economic summits, and G7 meetings. But beneath the surface, the fundamental dynamics of supply and demand govern the flows of global trade and finance. The rapid onset of globalization and technology has exacerbated these dynamics. In 1990, computers facilitated trade worth about $3 trillion annually. By 2020, digital platforms supported a global e-commerce industry worth over $4 trillion each year. Technology's rapid evolution has democratized access to information and markets while paradoxically centralizing influence among a handful of powerful technology platforms. Moreover, the rise of social media and instant communication has acted as a catalyst, amplifying not just economic news, but also public sentiment and reaction. Twitter alone, with billions of tweets, can affect stock prices and lead to instantaneous swings in financial markets. One infamous example is when a single tweet from Elon Musk in 2021 affected the value of Bitcoin, demonstrating the volatile confluence of technology, perception, and market dynamics. Currency markets, too, are a pivotal force. With an estimated $6.6 trillion traded on foreign exchange markets daily, the impact of currency valuation goes beyond